Finovate showcases cutting-edge banking and financial technology through a global conference series featuring short-form demos and thought leadership. Now, the conversation continues on the Finovate podcast.
Welcome to the Finovate podcast. Joining me today, we have Kyle Lui, a partner of DCM Ventures, who has worked with a number of early stage companies. Kyle, thank you for joining me on the podcast.
Pleasure to be here.
So for people who don't know about DCM or your work, can you give just a quick overview of what you guys are all about, the types of companies you look at?
Yeah, absolutely. So DCM is a nearly 25-year-old Silicon Valley-based global venture capital firm. We have about $4 billion under management. We're currently on our 14th fund, our 9th flagship fund overall. Core markets being North America, China, Japan. We do a lot in Fintech. So we're early investors in Bill.com, SoFi, Sigfig, Bridget. I've been at the firm for about 6 years and lead a lot of our investments across Fintech and enterprise SaaS. Prior to DCM, I was the co-founder of 2 startups. The latest one was a company called ChoicePass, which was acquired by Salesforce, became Work.com, which is their HR cloud.
Wow. So you've seen both sides of the equation, then the startup side, the venture capital side. You know, the piece that I think I'm really interested in talking with you about today is this venture capital side. This is one of those big X factors in fintech right now. A lot of people are wondering, what is the venture capital community going to be doing as a result of everything that's happening with COVID-19 and the various economic factors that are taking shape all over the world? Some people are guessing that capital will dry up. Some people are saying that there's quite a bit of capital looking for a home, and it just really depends on what types of companies are out there. What are you seeing from a venture capital standpoint about the amount of capital that's out there and who's getting funding?
I would say that about a month ago, a lot of firms were kind of hunkering down, focused on their portfolio, including us. And I think that just in the last month alone, there has been, many signals that, folks are open for business, particularly actually, and surprisingly at the early stage. We're seeing a lot of interesting early stage fintech companies get funded. I think that, at the growth stages, there's going to continue to be a lot more scrutiny, particularly because, how do these companies exit? Are large corporates still kind of open for business from an acquisition perspective? Public markets obviously are closed for the time being. So.
No, interesting. I think the early stage company is one that a lot of people are concerned about, myself included, because of the impact that early stage companies have on the entire fintech ecosystem. They've always been a source of new ideas, pushing incumbents to stretch themselves, to keep from getting complacent. And so it's really gratifying to hear that early stage companies are going to continue to be funded. Is there a difference now in the levels at which those early stage companies are funded versus what we might have seen, 2 or 3 years ago?
I'm still seeing lots of very large seed deals being done. Large is defined by kind of $5 million plus deals at the seed stage, $15, $20 million Series A's. We're still seeing some of that. I think thematically, there is a greater focus on kind of capital efficiency and ensuring that you do indeed kind of have customers in hand and signs that they'll be successful, as opposed to just buying the pure story. So I do think that even at the early stages, you're seeing more scrutiny. But if you look at venture capital overall, I would say one of the areas that continue to excite kind of generalist venture funds is fintech. And that there's still a lot of room for innovation across the fintech ecosystem. And the definition of fintech has really expanded to, traditional, say, consumer internet companies, B2B companies, where there's a payments angle, a fintech angle, maybe creating some new asset class that involves financing. So the definition has also expanded.
Well, that's certainly true. I mean, that's something that's been happening for quite a while. And we've been really on top of that at Finovate, watching as more and more applications for those demo slots come in from a wider variety of types of company with different types of markets. And so it certainly is a broad market. And it looks like there are going to be some significant positives for fintech coming out of this, as a lot of banks look to kind of immediately switch to a digital first interface away from the in-branch experience, which is obviously not possible in a lot of geographies right now. I do think that it's going to be interesting to see what happens from a venture capital standpoint to, as far as the types of questions or the types of background work that VCs will be starting to ask of the fintechs. And, from what you're saying so far, it sounds like there's going to be really increased pressure on these startup companies to demonstrate profitability potentially earlier than they would have had to do, prior to this. I think that we've seen a lot of companies who have had a lot of funding, who've never actually been profitable. There's sort of this future optimistic view, like someday they're going to own the market and they'll become a unicorn. But for right now, we're content to let them continue to operate at a loss. It sounds like that might not be something which the venture capital community will be as tolerant of, and this sort of drive to push for profit more quickly. Would you say that lines up with what you're seeing?
Largely, yes, although I don't think profitability is necessarily a prerequisite to getting funding, even at the growth stages. I think if you look at companies like SoFi, and which is in our portfolio, and Robinhood, that are not yet profitable but are largely considered the winners in their respective categories, there's still a lot of interest from investors. I think at the early stages, a big part of it is still around the team, but like this path towards profitability, this path towards capital efficiency, those are questions that are asked much more and diving into that much more than in past years.
Sure. No, I think that makes sense. And I think honestly, that's something which will ultimately, again, be good for the industry. So switching gears a little bit, because I think one aspect of this that's starting to become really clear is that not everyone is experiencing the effects of this crisis, this current situation in the same way. Some people seem to really be doing really well. Some people seem to be really struggling. Can you talk a little bit about, where those lines are, dividing the companies who are excelling in the current environment versus the ones who are struggling a little bit?
Yeah, I think broadly speaking, we kind of look at things like there's the pre-COVID world and then there's the post-COVID world. With the post-COVID world, and this is, say starting 2 months ago and then into some period in the future, the companies that are doing well, is it an enduring advantage or is it only temporary because people are stuck at home? And so it doesn't really fall into kind of enterprise versus consumer, enabling technologies versus disruptive technologies. I think it really is more around the individual companies and their strategy for a post-COVID world. And for certain companies, like we're investors in a corporate travel platform, those companies are not only not doing well, but probably need to find a new business model in the interim, because I don't think that's coming back anytime soon. So I think it's really going to be company dependent. But I think broadly speaking, companies that are set up to enable remote workers, companies that are servicing underserved populations of the consumer side, this move towards digital, I think there's just so many advantages right now for fintech companies. I mean, branches for all intents and purposes really don't exist. Like people are not really comfortable going into bank branches, right? So the key advantage that incumbent banks have is like no longer really there.
Well, I think it's one of those funny ironies of the situation that now all of a sudden going to the branch appears to be the more dangerous possibility, where for obviously many years that was the opposite of where kind of customer sentiment lied. And now you see that there is risk associated with it in going there, and that there are other options out there. And I think, challenger banks in particular are kind of made for this, sort of ready for this moment. So it's not a surprise to see them excelling to some extent. There are obviously a lot of other
Absolutely.
fintech companies who come to Finovate who have been anticipating this, sort of saying, you need to get ready for this type of moment. Nobody obviously anticipated exactly this situation, but it does look like this is a tipping point for a lot of people in getting more comfortable with digital banking. And I think there will be a long-term fallout from that. But I'd like to end, we're coming up on the end of our time here, but I'd like to just kind of end, if you had the ability to kind of cherry pick any company that comes across your desk right now, what is the sort of dream product, dream innovation that you would be looking for at this moment as a venture capitalist, looking at where we are in the world? What's kind of the thing that you're waiting for, excited to see?
I am a true believer that the kind of remote workforce and kind of like virtual meetings is here to stay and has been accelerated by 5 years. So I am really excited about the concept of natively built applications on top of Zoom or Google Hangouts or other video conferencing software to be able to allow people who traditionally have done their jobs in a brick and mortar location to really excel, right? And so the concept of like a virtual branch, the concept of virtual financial sales, having not just the video conference presence, but like the workflows tied to it, so that people can become more efficient in this virtual remote work world. So
It's a tall order, no question, but it does seem more possible now than ever before. And I think, this is one of those things that a lot of companies have sort of looked the other way around and said, we want to try and replicate a branch experience remotely. And what you're talking about is really a digital native application, something which is built with that customer experience online first, that remote experience first, which I think would be a real game changer for a lot of banks. So I completely agree with that. It'll be really interesting to see if anybody takes up that challenge. So there you are, Finovate podcast community. There's your challenge from Kyle. And that takes us to the end of our time here today. Well, Kyle, thank you so much for taking the time to share your thoughts with me.
Yeah, absolutely. It's been a pleasure.
The Finovate podcast is produced by Informa Connect in association with Provoke.fm Media. Check out Finovate.com for information on Finovate's upcoming shows and to learn how you can get involved. The discount code Finovate Podcast will save you 20% on tickets to all of our events. And you can email us at info@finovate.com for information on sponsoring, speaking, or demoing. Thanks for listening.